Hi everyone, welcome to this masterclass on finance and CFO strategies. In this masterclass, we basically cover the pain points which are being faced by businesses, hypergrowth businesses and founders. And today we will talk about very interesting topic, which is 5 hygiene factors which separates a matured founder from a frustrated founder. So today I've got my colleague Sada with me in this master class. Sada, let's start, and if you can share your screen so that we can start the thing. I think you have already. Yes.
Yeah, it is.
Uh,
Sure.
yeah. So you can go to the next slide. So let me first take this opportunity to introduce me. So hi, this is Alok Patnia, founder and managing partner at Tax Mantra Global. In total, I've got 23 plus years of experience in global finance, tax, and structuring across India, US, Singapore, and Dubai. We recently opened our UK office. I have advised to companies wherein they have created a value of more than $20 billion. Some are listed, some are unicorns, some are sonicorns, some are still growing up. And I have been an active investor into startups, and I have backed a lot of startups in the last 10 years or so. I have prior experience with EY and KPMG in their cross-border tax and strategic growth team. And as an organization, we have been awarded by Times of India, Economic Times. We have also been featured on ET Now's Leaders of Tomorrow, and we have been awarded as the upcoming Global Tax and Advisor. So we are also part of the current Stanford Transformation Cohort. It's a global program by Stanford University. And as an entrepreneur, I have held leadership role at TAI and various other startup focused ecosystem industry body. Uh, Moving ahead, let me talk about TMG as a group and what we have been able to achieve. So we are completing 15 years of existence as TMG brand with 40 plus years of experience, as our network firm was incorporated in 1983. We have helped 750 plus growth stage unicorn enterprise businesses in last uh, so many years of existence. As told you that we have helped and in creating 20 plus billion in client valuation growth. And we have globally 150 plus global experts in-house and externally. Um, as I was saying that we have expertise in cross-border structuring and fundraise compliances, plus local compliances in Dubai, Singapore, UK, US, and UAE. We go deep in helping businesses in clean up their financial data point, due diligence preparation, and governance fire framework tailored for growth. And we have also been auditors for various government bodies and foreign government bodies. Uh, we have helped a lot of interesting names, even though we have helped close to 30% of all the unicorns in Indian startup ecosystem. To name some, we have helped Swiggy, Razorpay, Unobank, and many such very disruptive, interesting companies which have become big. We can go to the next slide. So, uh, Sada is with me. He's a partner at TMG. He's based out of Bangalore. He's a partner in CFO advisory practice. Sada, why don't you introduce yourself?
Yeah, so hello team. Thanks Alok for giving me the opportunity to be part of this masterclass. So basically, I'm a chartered accountant with 20 plus years of experience managing the finance of multinational companies to startup in my recent role. So I've worked with Dell and Vodafone, Boomi, and Bank Bazaar across multiple finance areas, leading international teams, uh, transitioning the teams from different country to India and from India to abroad, and also leading the companies to DHRP and IPO level and rising funds, leading the fundraisers of debt and equity across multiple products. Uh, Close to about 150 crore I've raised with when I was leading the finance for Bank Bazaar. And I've also worked with multiple venture capital firms, domestic and international, when I was leading the finance with these companies, and also multiple family offices. And I closely engaged and led many ERPs implementation, especially NetSuite and Adaptive, which is more of a core finance and accounting ERPs. And I also had an opportunity to be part of the mergers and acquisitions and various spin-offs, especially when Boomi was moved out from Dell and Boomi acquired a few other, subsidiary companies. So I'm here, be part of Tax Mantra Excited, and we've been working on multiple exciting projects and the regions uh, within India and abroad. Happy to, host the masterclass for all of you guys.
Thanks, Sada. That was very comprehensive, and you bring in a lot of expertise and skill for the to the team. And I think we can move to the next slide. So let's also, as I told you, top 1% in the ecosystem, both India, Singapore, India, Dubai, India, US corridor trust us from Swiggy to Razorpay. There are very known companies in this list, from Daimler to Nazara, and we have been helping these companies scale, operate, do cross-border compliances at one stop. So it's been a great journey for Tax Mantra Global as a brand and as a group. We have been onboarding a lot of interesting companies on a weekly basis, and we are on a very different growth journey as we speak. And let's now move to the topic of for today. And the topic for today is very, very important, and this is very, very close to my heart. Why I'm saying this is I have been very much part of the Indian startup ecosystem for the last 15 years, and I have seen both kind of founders who are very sorted, who are cool, calm, who raise capital, $1 billion of money from global VCs, exit, do mergers, do acquisition, create wealth for themselves, for their employees, uh, create lot of employment in the ecosystem, and are part of the larger Indian startup ecosystem and larger Indian growth story. The second class of and the second category, or the second kind of startups which I've seen in last 15 years, is startups who are founders who are frustrated. And they are frustrated not because of the product, or because of the market size, or because of the investment opportunity, but they are frustrated and they are not able to raise capital is because of somewhere they have not focused, or they have not taken help from experts on finance, taxation, processes, and systems. Uh, Today, we will focus on five key areas in this masterclass. One is, in this world, and Sada would agree to this, that there was a time when story would fetch you $1 million. I mean, you talk about great story, you talk about India story, you talk about the internet which will penetrate and large middle class will come up, and they will move their consumption to online, and this is my target market size and everything. And I will just create a very, very rosy picture, and investors will come and will fund me. Today, numbers are very, very important. And today, considering that most of the start VCs and most of the investors look for a prototype, look for some proof before they invest, it's very important that the kind of books you have, so the kind of MIS you have, the kind of cap table which you have. What is your cap table? Very hygiene in the sense, how many people are there on your cap table? Are shares allocated properly? Are there different class of shares which has been allocated? And what kind of books you have? Are you closing your books accounts on time? Are you actually filing all the compliances? Are you paying taxes on time? These have become very, very important now. Very, very important for reasons we all know what has happened in last 2 to 3 years in terms of some not so great stories about fraud and financial fraud and misgovernance in the startup ecosystem, and largely overall. So numbers have become very, very important. Numbers have become very, very important. Numbers have become more important than narrative at this point of time. And numbers will actually create value for you. So if you see the second point, if you have the numbers, and if you are on top of the numbers, and if you're on top of your finance hygiene, your valuation will actually grow. We have seen in our experience that the investors really like the product, the investors really like the founders, the investors were very, very positive about the market size. But then that when the due diligence started, there were more skeletons coming out of the cupboard. And it took two to 6 months to actually close a due diligence. I still remember an interesting story wherein it was sometime during COVID, and when there was a geopolitical challenge between our neighbor and the Indian government had banned all the apps which were originated from that particular neighbor. And suddenly there were few interesting homegrown apps which became very popular. And there was one founder who came to me at 7 p.m. in the evening that, tomorrow morning we have a call with top 10. I will not name, but amongst top 10 VC firms globally, and they want to fund us and they want to have a call. And I don't have any finance person, I don't have a finance team, I don't have a CFO, I don't have a financial advisor. Can you actually join in the call and help me? So I joined the call. And in the call itself, they had given the term sheet to the founder, and the valuation was close to 100 million pre-money, and they wanted to invest 25 million, and the post-money valuation was 125 million. And post the call, in 15-20 minutes they had sent the term sheet to the founder, and they said that from tomorrow, it was Thursday evening, from Friday we will start the due diligence, Friday Saturday we'll close the due diligence, and Monday we will sign the shareholder agreement, because they feared that many other investors will come and put in money, and they wanted to have the exclusive rights. When the call ended and we got the term sheet, and when I asked the founder said that you have to lead this due diligence and you have to help us to close this. When I started asking for the documents, we realized that even the company was not incorporated. That app was still in the family, a company which was there, wherein there are different family members. We realized that there was no data room. We realized that there were no IP agreement. We realized that there were a lot of transaction in the books which we could not never explain. And when we requested, and I knew that this cannot happen in 2 days, because the company has to be created, the IP has to be moved to a new company, and then the complete structure has to be done, and then the startup India registration was required, and all those things was required. So we scheduled another call with the investor on Friday evening itself, and they were from US, so it was their morning. And we said that we need 2 weeks to do this. They said, okay, let me come back in half an hour. And in 20 minutes, we got an email that the term sheet which we had sent is invalid, and we withdraw from the term sheet, and sorry, because your structure is not ready. Until today, that startup is struggling, I think almost close or something, I don't know. That's the importance of the structure which you have. And that's the reason I say that your financial due diligence and your financial hygiene factors actually help you to increase your valuation. The third is, we all are working in a very, very global environment. Even though Geopolitically, many countries are trying to consolidate and trying to be restrictive, but understand one fact: the global cross-border transactions will only increase. And we are sitting in India, and India as a country, we are expanding and we are exploding. We are the fastest growing large economy as we speak. There will be market for our products globally. In fact, I've been working with so many brands. Even day before yesterday, we onboarded a women luxury brand from Mumbai, and they are opening their store in Dubai Mall, and they are opening their store in San Francisco and New York. So you will have to have global structure, and your global structure has to tell you one story. It can't be different stories. Your Singapore books talks about a different story. Another story, if I can tell at this point of time, I think I'm not boring. I'm not, but one interesting story. So there was one startup which was into SaaS, and it was doing very well, almost 2.5 million in ARR. And they came to us and saying that you have to help us in this due diligence because the investors are asking questions, we don't have answers. And when we went through the due diligence questions, and then we asked them, we realized that their India books and Singapore books do not match. For instance, in India books you were reporting revenue from Singapore, but in Singapore books those transactions were not reported as expense, and there was no consolidation between the books. Singapore books was talking one story, the Indian book was talking one story. So it's very important that when you have global structure, you need to have one structure and one story. That is very, very important. Third and the fourth point is governance. You know, when we talk about governance, we talk about the intention to create wealth in an ethical manner. And I was listening to Naval Kant, um, uh, and he was talking that you can actually, and he has proved methods that you can actually create wealth ethically, in terms of how you make decision, in terms of what is your board structure, in terms of who are your directors, are there family members who are on employee record just to pay off, just to take out money? What kind of vendor registration processes you have? What kind of systems you have to onboard vendors? What kind of systems you have to spend? Do you have budgets? Do you create budgets, quarterly budgets, or there is single founder and he's taking all the calls, and on one morning he will say, today we need to do these expenses, today we need to do these expenses, and we do it? How do we run this company? Because you are when you handle money, you have to be careful, and when you handle others money, you have to be extra careful. The problem which we have seen in that many times, even after raising capital from third party, the founders don't change their way of working. They still feel that this is their money. Again, there are a lot of story of misgovernance and frauds. I will not get into those, but you have to have a watertight governance system in terms of how do you manage your company. And the fifth, which is very, very important, is compliance is a competitive edge. Most of the founders many times feel that compliance is a roadblock. If you have compliance system, if you have reporting system, that will delay your decision making, and it's a roadblock. But that's not there. In fact, if you are a compliant company, you have an edge, because in today's world, because of the compliance competitive edge, you will be able to fetch more valuation, because the investors will have more comfort in putting money in your company. So we will talk about these 5 points, and Sada will go deep into these points. But these are the 5 main points which differentiates between a funded founder who is able to create wealth for himself, for his employees, create employment for the ecosystem, and be part of the larger growth story which India is going through, and founders who are frustrated, who are not able to raise capital, who are always stuck in due diligence, who are always stuck in firefighting for compliance. With this, I hand over to Sada, my colleague, to deep dive into all these points and enlighten us on these points. Thanks, Sada.
Thanks, Alok. I think you have kind of covered all the points pretty comprehensive way. So let me just take you to the next slide, um, which more talks about, uh, the first point what Alok covered. So this is basically, here we are going to talk about more on the books, MIS and cap table, and how you're keeping your systems and process pretty clean and which is trustworthy and transparent, right? So here, the first and the basic thing what any investors would want to see is, yes, you've already given the pitch deck, but beyond the pitch deck is more of a, set of numbers and the stories which is coming from the top of the mind from the founders or the executives of the company, you know but they would definitely post that, which the pitch deck is kind of driving the interest, and it's kind of pulling the interest from the investors. Once they are interested and they get into the details, the first thing that they get is your your numbers that runs into the systems, that runs into your review process, that runs into your business day in and day out. you know so the first thing that they would need is the discipline around how they are prepared. How is your month end closes are done? Are they done in couple of days from the close of the month? And all the GSTs and any other tax related matters are reconciled every month, or every quarter, depends on the respective tax subject, right? And then, are your MIS packs prepared pretty diligently and the way that it is required by any statutory requirements, or the requirement that is going to meet the boards for their decision making whenever they meet every quarter or every month? Are they giving enough visibility and clarity for the business leaders to make decisions uh, whenever they are looking at the MAS packs? And also we need to have the clear cut revenue recognition policies, uh, and the policies around capitalization, inventories and provisioning, amortizations or depreciation, all these policies, and ESOP, any other debenture notes that we have issued, the cap table clarity. A lot of these things are definitely are the first thing that is looked upon by the potential investors. And if you're not clear, or if you're not able to provide that system exists, there's a process that is being followed, and the output that is being helping the leaders and the investors to look at the business in a transparent way. That is a first and the foremost step that kind of uh, stops the investors to going further. So this has to be pretty clear, and put it across to the investors in a much more cleaner way, so that we earn their trust to go to the further steps, beyond. Uh, I mean, to go to the further steps to till the investment happens. So, basically, how do we make this happen? It's a pretty simple thing. Uh, we can run a mock due diligence, right? And we ensure that. So in that process, we kind of going to ensure everything matches to pi to pi, and all your MIS matches to your returns, and your returns matches to your books, and the balances from the bank statements or any other annual quarterly filings that are happening, and your ROC filings all kind of talks to each other, and all these interlocking reconciliations are done and dusted in mock due diligence itself. So that kind of gives you an confidence um, on how your systems are there running, and if there is any loopholes, if there is something missing, we always have the time and the luxury of time to go and fix it before the investor comes and finds it out, and they kind of loses the trust on the systems and process.
Sada, if I can just come in here,
Sure.
you know, this is so important for founders and more so for hyper growth businesses because uh, what separates a hyper growth business from a normal business is speed,
Yeah.
and at speed at which they are growing or they are disrupting what they are disrupting in terms of product, in terms of, so you talk about quick commerce, what's happening now, and when you do that, you many times you at a speed at which you are running, you are you would do some mistakes, you would uh, jump the gun, you would jump the red light many times, you would do something which need to be rectified. And this is where the mock due diligence becomes very, very important because it's the situation should be that when the investor comes in or when the banks comes in, because now many of the debt fund are also coming in and banks are coming in, they are ready to fund startup. Your due diligence, your paperwork or your data room should be ready, and in matter of minutes, if not hours, you should be able to share all the documents which a third party would request. So I think that is very, very important. Yeah, we can move
Yeah.
ahead.
Yeah.
Yeah.
Sure. I think we see that point, whatever you just now covered as part of due diligence is, we are covering it here. See, the
Hmm.
previous slide talks more about, your underlying, the daily or monthly or quarterly system and process that are running in your, in your business. So the
Right.
due diligence is something that comes, that has to happen when, as and when it's required, when you go for debt funding or equity funding or any other venture funding, that you're going, the due diligence is something which we cannot avoid. Though it's kind of an event based, it's better that we plan that in advance and we prepare in advance. See, that's what we used to do in when I was working in Bank Bazaar, right? Whether we are going for funding or not, every quarter we kind of update our data rooms, update all the required legal documents, contracts, financials, and every other details in the data room, and we review it with our founders or the senior leadership team and ensure that they are up to date. And any time that we can ship or share the data from data room, or we can probably share the link to the potential investors for the due diligence, it's not going to take much time, maybe just a couple of days, so that we kind of ensure everything is updated and then share the links or data. And that's it. Investors has all the view. They can go into the data room and look at every details, which is like hundreds and hundreds of folders. They can review everything, and all the investor related questions, right, which were, if we have approached some 50 investors, and they are going to come out, each one is going to come out with some 10 questions every time, and all those questions are also captured in that, so that they're explained better and they're self-explanatory. And what they're coming to us is only after reviewing 99.99 percentage of the all the data in the data room. And our involvement is much lesser. And it's what we need to answer is more of a value added, or more of a business related questions, and not really more of compliance and numbers and why that's not matching, why it's not reconciled, why that is, they're not talking to each other. These noises are, to a large extent, avoided. And what we focus is more on the business and how do we grow, where the funds will be deployed, more of a value added discussions that that we are going to drive when we keep the due diligence process uh, you know more stronger, more transparent, and pretty
Right.
clean.
Right. I think that is very, very important, and that's a very important point. And I have realized one thing, Sada, is that when uh, when you are well prepared, the confidence is very high in the minds of the investors. But
Yeah.
when they see basic things not in place, the confidence really shackles and the confidence really breaks. in the minds of the investors. You talked about things are not matching, proper documentation are not there. There is a repetition of documents. This give you
Yeah.
complete immediate picture that there is something wrong in this company, right? I think that's the reason it's so important for to be really focus on what Sada was saying some time back. Yeah.
Yeah. True. Yeah, so let me just move on to the next one. Here we are talking about governance. I think Alok very well covered. It's more about you know how we are running the business. How we are how our board, shareholders, investors, any other parties to the business, whoever is involved or are looped in into the major decisions of the business, and how much of disclosure is done, and are their minutes kept properly, do we have their consent. Many times we get into multiple dead deals, and that requires hundreds of conditions, and for many material decisions we will have to approach them, right? And only during the at the time of due diligence, when the investors are requesting, then we will know that, okay, so XYZ bank requires us to get this approved before we get into these kind of deals. And those kind of realizations are missing out of looping in the right stakeholders at the right time is something comes out when we don't have the real the right systems in place and the process and checkpoints in place, right? So those are all really important when it comes to getting the trust from the investors with respect to the governance, especially the policies with respect to ESOP or valuations, statutory filings with ROC, and Ministry of Company Affairs, and then you're maintaining your customer contracts, any termination of contracts, employee contracts, or policies relating to POSH, whistleblower, all these things. Though as a rushing founder, as a founder who meets the who's kind of getting every surprises every minute, though they are on the back of his mind, or probably they're not his priority, but those are really important backbones in order to get the trust from the investors. So these things can a lot of ways and means to avoid this, or to better prepare for the governance related compliances, having an index sheet, the request registers, files, and having the proper owners for different processes, having the record of the board rectifications or board decisions, their minutes of the meetings, your ESOP related documentations. They should, many times these ESOP related documentations come, we prepare it in a rush whenever we just before going for the funding round, but they are not well prepared and thought of, which kind of complicates uh, uh, the understanding and how the ESOP generally works. So I have a very similar example when I was working with Bank Bazaar. Uh, we are actually we've kind of finalized all the term sheet, and finally we added the ESOP related clause. The promoter felt that this is something that we have missed out and we need to add it now. So we added it, but it was not well understood by me or by the CFO uh, or by the CEO. There was a lot of details and descriptions that were missed out, which kind of brought in when it went to the investors. So they are really good learnings, but this is something in one-off. We need to have a right process and the right controls over the governance, so that we are able to gain the investor trust.
Yes. Yeah. Very well said.
All right, so here I think Alok was has been, I mean, the tax mantra has been a strong player in this area, where we last 40 years we have been giving the international tax structuring on how to structure the entities and how do they operate, how the money should flow, how the ownership should be set up between multiple entries across multiple countries. So though, you know, you know, it should be very seamless for an investors to look at the business. I think they should not be bombarded with the complexity that are involved in the cash flows, the regulatory influences that are happening between the transactions in multiple countries, um, and how their ownership is structured and how they're consolidated. These are all really uh, very transactional or very not the ones which any investors would want to see as a complexity. They are pretty much any investor would think that these are pretty much settled. These are pretty much running well underneath the what they are seeing, right? Uh, so it's very important to keep things simple, to keep things transparent, and all the businesses entities across different countries are aligned in the same way uh, as your headquarters is aligned. And the ownership structures, they should be able to understand the clear ownership structures across different entities and how they are flowing, how the funds are flowing, how your ownership is flowing, and how end of the day what it means, your consolidated statements, right? So they should be able to, when they look at the consolidated statements, it should be pretty simple and clean to understand rather than trying to understand the complexities beneath that. So I think
Right.
Taxmother as an entity having a great and breadth and depth of experience, expertise in this area, and that is something really uh, much appreciated from many customers that we have given the services to.
Right, Sada. If I want to give one example, I was talking to one founder last week, and he is into deep tech health product. In fact, they're doing very well, and the gentleman has migrated, has come back from US to India, and he has created the IP, and his main market is India. But he has got another entity in US, and he has raised some safe notes and some convertible notes in US.
Mhm.
Today, there is no connect between the Indian entity and the US entity. And the Indian entity, and he has also raised some capital in the Indian entity from local investors. Now, most of these people were friends and family, and they didn't cared about the IP, and they didn't do the large due diligence exercise. And now he's going for larger round, and he's going for Series A.
Mm.
And he came to me and said that now I am in fix because investors are asking me that which is your main entity where you will raise large capital, which will be your entity wherein cap table will be there, which entity where there will be exit will be there, is it US or India level? And I don't have answer, and I don't know what to be done. Right. Uh, I'm telling you, today he has got the momentum.
Mhm.
Today he's already at, I think, 1.2 million ARR because it's a subscription model which they have created. Uh, to rectify this structure, it will take 3 months, 3 months to 4 months, because there will be RBI approval which we required. Now, many times we have seen that in a startup, in 2.5, 3 months, if you tell investors that we are working on the structure and we are rectifying, aligning it, by the time you do it and you go back to the investor, he will say that I have already invested in another startup which is in the same space, so we will pass on the opportunity as of now. I have seen this many times. So people, many of the startup founders, they don't think deep while creating global structure in terms of which will be your holding company, subsidiary, and all those. In fact, I think one full masterclass will be required only on the global structure. But having said that, this is very important area which no founders or business owners should neglect.
True. I think nowadays, expanding into other countries, to various other countries, are pretty much what do you call it, required thing to grow the business. It's not just the domestic market that we are trying to address, right?
Right.
And for many reasons, one is to capture the market, the other one is to get the funds. But end of the day, it should all sink into one single objective, one single entity, ownership, and without losing much of a control or the fund flows.
Right.
Yeah. All right. So so this is the last slide on out of the 5 aspects that we are planning to cover. So this one is a compliance, which is a really important one. Though it is last, this is really important. We have the moment we are registering our company, your compliance starts. Compliance to ESI, PF, MCA compliance, ROC compliance, income tax, GST, and 100 other compliances that are coming in, right? So, this is something, it's really mind chewing thing for any finance head or a CFO, or or it can be a founder, right? There's a lot of surprises comes from this. So though this is so the volume is more, and you need really good a system and process to ensure that every compliance is checked at the respective time whenever it's due. So I think it all boils back to all the previous 3-4 points that we discussed, that once you have a good system, once you have a good compliance system, once you have a good governance system, uh, once you kind of done through one of your due diligence, you would have found a lot of these issues, a lot of gaps that needs to be addressed, right? So this is something which cannot be missed. And tax mantra, we have been giving providing compliance services along with CFO advisory uh, to close to 80 plus 90% of our customers who requires this, and this is something they don't want to get into their into their daily routine. So here, if you see, how do we fix this? How do we be ready uh, so that we don't get into any compliance issues later? So one thing is that you need to have the real good checklist. I think, in fact, Alok and team has developed a dashboard tool that kind of gives you, what is due when, who's a responsible owner. If it is overdue, it kind of sends out the notification to the respective accountable person. It's really automated. A such tool or a simple Excel sheet, which somebody can just go and check it every day and notify and follow up with respective people. These are really good disciplines to have to ensure that the compliance is met at all the times without missing any time.
Right. Right. Well, very well said. Yeah.
All right. So here we are going to the next slide. So this is where our uh, products or the packages that we have for various startups or mid-sized companies. We have basic plans where we give you all the bookkeeping, payroll, GST, compliance, audit support. So from the time you incorporate, we take care of everything in the due course, your monthly compliance, quarterly compliance with respect to all of these aspects, and including your annual audit assistance as well. And we do have tie up with our partnership firms, where we also take care of your statutory audits and tax audit related things, where uh, we work hand in hand, so that from your perspective, things move seamlessly, but whereas we work in the back end with our partner firms to ensure that uh, the required compliances, annual or monthly or quarterly, are all met, right? uh, and we also give CFO advisory services. So whatever we covered on the left side is the basic requirements, and what we have on the right side is something which is more value added. Let's say you want to have more visibility into your business, what's happening to your cash flow, where is your cash going, where is your cash stuck, how's your P&L looking over a period, how is your your quarterly P&L moving or your monthly P&Ls are moving, uh, you know how we can plan the business over the next few years, either short term, it can be just few quarters forward, or it can be 5 year forward, right? uh, so all those value added services is something that is that's also included in the CFO advisory uh, service, which can be avoided. Either it can be a pack, or it can be a service that you can choose to get. It depends on your requirement. And on top of that, we also have a fractional CFO service where we have senior partners in place. You can avail them as and when you need it. It can be a couple of hours in a month or a few days in a month, or an event based whenever you go for a funding round, or when you go for any debt funding or equity funding, or due diligence is happening and you want some senior supports. We are there to help you out, guys. Right?
Thanks, Sada. Thanks,
Yeah,
Sada, for
sure.
this. So we have a very comprehensive offering as Sada was talking about. And if you can go to the next slide, Sada. So, before I talk about more, there were some interesting case studies which I wanted to discuss. And those case studies are so how we help Swiggy from day one. And these so when we started with Swiggy, we had a discussion with this CEO, and he said that the traditional chartered accountants are not able to understand how a food tech company can be built. So we started helping them from day one. We have helped them to incorporate the company in 2013. So we have traveled the complete journey with them from, I would say, from incorporation till the IPO stage. So I think that was very, very important. So Swiggy was one example wherein we as a firm in last 12 years, we have really, really gone through that journey from incorporation to the IPO stage. And we have helped Swiggy wherever there was a need to build processes, systems. Initially, we worked on a very lean model. Everything was outsourced to us, and we were their compliance and finance team. And as and when they started growing, we moved into more of a reviewer role, and implemented and created their own finance and compliance team. And we got into the reviewer role, and we got into the monthly review, quarterly audits. So it's a journey we traveled. We helped them to do compliances on RBI when they were raising capital. I still remember the first time they raised a last large round in 2015. We were very much at the initial stage, we were very much there. So this was a very interesting case study which we have, and wherein we have helped Swiggy from day zero to the IPO day as we speak. We can go to the next case study, Sada. Um there was also one very interesting example wherein we have helped one of our startup got acquired. So the next slide, yeah,
The push one. Yeah.
yes. So Poshwine was a startup which got acquired by Razorpay, and we were helping Poshwine for day one, from day one. And when there was an opportunity, and again a lean model, everything was outsourced to us, and because it was a bootstrap company, this was a unique company which directly went for acquisition when Razorpay acquired, and again from no external finance team, no internal team, to everything moving to us. And and uh, and they had a global structure also. It was a global structure with India structure, and everything was closed in record 90 days. The due diligence closed, the round closed, and the exit happened, and the deal was signed and closed in 90 days. So this was also a great example wherein, and we are very proud of this transaction wherein we were involved. If you talk about the next case study, wherein we actually there was a GST issue, and we as a team, we are very strong on the litigation, and especially income tax and GST, and how we have helped them to to go through this and come out of this GST issue, which had become a big issue, and we are not giving you the name because of some NDA sign, but we have built a watertight compliant system for them, and so that they now don't get into these kind of problems again. So from incorporation to compliance to fundraise to GST litigation to systems to MIS to processes, we have seen everything in our 40 plus years of legacy, and especially with Tax Mantra Global as a brand in last 15 years. Yes, Sada. Uh,
Yeah.
yeah, we can go to the next slide. So again, why Tax Mantra? We have already explained. So we are a global leader in legal and advisory services with over 40 years of legacy in India, US, UK, Singapore, and UAE. And we have 150 plus professionals. We offer services that include cross-border business structuring, global setup, global tax compliances, business structuring, cross-border advisory, fundraise, CFO practice being led by Sada, and cross-border compliances in different countries. And we as a firm, we are a one-stop solution under one roof. So we have lawyers, we have company secretaries, we have chartered accountants and tax professionals and people who are expert in litigation. So everything under one roof, that is a big advantage with us. Yeah, so this is what we are about, and this is about Tax Mantra Global. So what's next? So I think what as a business owner, you would have noted that uh, fundraise and growing and exiting and achieving your dream objective of raising capital or becoming expanding your business, you know compliance and governance hygiene is very important, right? And at this point of time, what we can suggest is that whatever you do, you should, as a founder or a business owner, you should be knowing that what is the current situation of my compliance and due diligence and finance hygiene. So what we can do is that we are running an offer which is called mock due diligence, wherein we will help you to do a mock due diligence, and we will run a mock due diligence wherein we will give you a report. We will highlight key areas, red flags, wherein we feel that you need to focus, and then if there is a need, we can also help you to execute and rectify those. So the offer and more details about mock due diligence, you can get it in the comment box on YouTube when you watch this video, and you can talk to our team on this, and we will be more than happy to support you on this. So I think that's it for today, and we hope that you would have really liked the masterclass which we had today, and I really hope that you are on the side of this founder or a business owner who is able to achieve your dream in terms of raising capital or exiting, or have a strong watertight compliance and processes and system, and not someone who is frustrated and who is always in firefighting mode, and who is always trying to dodge and trying to rectify and see problem on a reactive mode. So I think with this, I take your leave, and I we will come again with more masterclass, which will be very useful with our experience in the ecosystem. The idea is that we want to bring in lot of important knowledge and important stuff which will help you, and so that you can reduce your timeline in making your successful company, and we can be your partners in this journey. Thank you for today. Sada, thanks for putting this wonderful masterclass. And as I said, that we will come back soon with more stuff.
Thanks a lot. Thanks, everyone.
Thank you.
Thank you.